John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hey there. Hello, this is John Ulzheimer. I'm a consumer credit expert. I've got almost 30 years of experience in the credit industry. In fact, in November will be 30 years. I can stop saying almost 30 years. I have spent time at FICO, which is the company behind the FICO credit scoring system, and Equifax, which is one of the three generally recognized credit reporting agencies in the United States. And today's topic is going to be credit scores used by mortgage lenders. You're probably wondering why is that a topic? Well, it's a topic for a variety of reasons. The most important reason is that the mortgage environment, unlike any other credit environment, is there is a requirement to use a specific brand and generation of credit score. That does not exist in any other lending environment. And so it's an important topic to go over because it's frankly, it's caused a lot of problems and is causing a lot of problems. So in the mortgage environment, you have thousands and thousands of mortgage brokers and tons of mortgage lenders, but they're all, not all, but most of them are beholden, meaning that they're required to follow the policies of the FHFA. And the FHFA is essentially a quasi-government entity that oversees, Fannie Mae, Freddie Mac, and if you look at the number of mortgage loans that are taken out in this country, the overwhelming majority of them are either Fannie Mae loans, Freddie Mac loans, VA, FHA, USDA, meaning that most mortgage loans are not being issued by private lenders who are holding the mortgage loan themselves. These are all Fannie and Freddie loans, and because of that, the mortgage lender and the mortgage broker has to use the underwriting criteria set by Fannie Mae, Freddie Mac, FHA, VA, USDA, and essentially the FHFA. And I know I'm using a lot of acronyms. You can look all those up. They're all essentially quasi-government organizations. So, unfortunately, there is a requirement in mortgage lending to use really, really old FICO branded credit scores. And by the way, this is not a criticism of FICO. This is not their fault. They're just the credit score developer. They don't mandate that any particular lender use any particular version of their score or use their scores at all. The market is normally a free market, except for in the mortgage environment. So when you go apply for a mortgage loan, the mortgage broker or lender is going to pull all three of your credit reports, all three of your co-applicants' credit reports, 3 of your FICO scores, and 3 of your co-applicants' FICO scores. And so they're essentially going to have 6 credit reports and 6 FICO scores, and they're going to underwrite it based on the lower of the middle numeric scores. And so if your 3 scores are 700, 710, 720, then they're going to look at your 710 for the underwriting. It's the middle numeric score. That's not really anything, that's not a big deal, right? If you've got good credit, you should have 3 good scores regardless of where they fall kind of numerically. Where it does become a problem is the scores that have to be used in mortgage lending are really, really old. In some scenarios, they're 2 decades old. And so that, we're getting close to kind of the turn of the century, if you will. And where this becomes problematic is the newer versions of the FICO score. There's actually 4 generations of newer scores than the ones that are used in mortgage lending. 4 generations. So think if you were using an iPhone 4 generations old. People normally choose to upgrade to a newer version because it's better. Not in mortgage lending. The scores that are currently used, and again, this is not a criticism of FICO, it's not their fault, they're scores that do not consider or don't bypass paid collections. They don't discount low-level delinquencies. They don't discount medical collections. And so there's a lot of features and benefits that exist in newer versions of the FICO score that are not being enjoyed by mortgage applicants because FHFA makes mortgage applicants use these really, really old scores that have old features, not the newer scores that have these newer features. Also, VantageScore. mortgage lending, you can't use a VantageScore because it's not a FICO score. Well, VantageScore has a different minimum scoring criteria than FICO, and more people can actually be scored under the VantageScore than can be scored under FICO. So you actually could have consumers who would apply for a mortgage that would not have a score under FICO that would have a score under VantageScore. And so that might be, better for them from an underwriting perspective, because lenders like to underwrite based on scores, not just based on data. So those are some of the reasons why, in my mind, it's problematic. So the next time you go apply for a mortgage loan, you're going to see like FICO V2 from one credit bureau, FICO V4 from another credit bureau, FICO V5 from another credit bureau. And again, there's nothing wrong with these scores. They're perfectly fine, but they're just really, really old scores. And there have been several generations of those scores that have been developed and are commercially available and have been used for a really long time in every environment other than mortgage lending. So if you have any other questions about mortgage lending and credit scores, drop them in the comment section below and I'll do my best to get to them. Thanks for watching. Have a great rest of your day.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.